But yeah, thanks everyone for coming. Good morning, everyone, for those who are in the States. Good afternoon if you live elsewhere in the world. Thank you guys so much for coming to today's live trading session. And as you guys know, today is Monday, May 9th. It's the first trading day of the week. And right now, we're beginning to see some good momentum trading opportunities take place in the market. Really, there's a lot of them that's in the midst of forming as we speak. So then we're going to cover a few of them. I may not be able to cover all of them on today's session, but what I will do is maybe give a list of the different pairs that we're looking at, and I'll post it in our group chat area. So yeah, I'll definitely let you guys know when we decide to do that. But the first pair that we're going to look at right now is the US dollar Japanese yen. Is one of the major pairs, one of the more popular pairs. However, um, because the US dollar and Japanese yen are somewhat correlated to some degree, they both are considered risk averse or safe havens. Sometimes, it's not a good pair to trade. But today we find an opportunity because, as you guys know, the dollar has been on this rally to the upside. The yen is showing some level of weakness for today. So a good pair to trade at the moment is US dollar, Japanese yen on this 1 hour pullback. Now, we go over this same information over and over again, but based on what we see right now, should we be looking to buy or sell soon? Let me ask you guys that question. Should we be looking to buy or sell? Okay. So then Joe said buy. Jamal said sell. Jesse said buy. Adam said buy. And yes, the buys are correct. Jamal, I know we see price pushing down, and there could be a possibility that things could be shifting and rotating to the downside, but we don't have clarity or confirmation of that happening yet. But you could be right. I mean, this could be in preparation for a sell setup. It's just that with the way price is moving right now on the 1 hour with higher highs and higher lows, we don't have that confirmation yet. Because remember what a bullish upward trend represents. It represents higher highs, higher lows. You get a higher high, higher low, higher high, higher low, and another higher high. So then this embodies what we would call a bullish market or bullish environment, an upward trend. And we typically want to trade on that side of the market where that momentum is, especially with this particular pair. But yeah, we'll be looking to buy right now. And as you guys can see, price is testing a critical level or critical area right now. And I'm going to do a few things. Let me, for starters, remove that line right here. All right. So then let me do a few things. Let me shift this here. So before we do that, the first thing we want to do is see if there is directional confluence. See if there's multiple time frames supporting a move to the upside. So then we got the 1 hour is looking bullish. Now let's drop down to the 4 hour. 4 hour is bullish, right? 20 SMA is sloping upwards right now. It's looking bullish. And that's all we really need in order to really look at this trade. But let's go to the daily. Daily is bullish as well. As you guys know, the yen, well, the US dollar has been strengthening. That's the reason why we see this move to the upside. But yeah, we're in a bullish environment. There's directional confluence. So then what we want to do is look for an opportunity to buy at a what? Where do we typically want to buy at? I know we talk about this over and over again, but this is for our newer members. They may not know some of the phrases and things that we typically say, but yep, we want to buy at support. Yep, exactly. Jamal is correct. Greg is correct. We want to buy at support. So then, right now we see a few things. And I guess for the sake of time, let me just highlight these things. Okay, so then we see this candle right here, and we look left, we see that we have this structure right here in this area. I don't know, you guys can see it right here, this area right here, and this same level right here. This is consider, 1 hour structure, but price is testing this area as we speak. Right around, right around here. It's testing this area right now. So then what we can do is identify a zone. We can identify a zone, and we could say as long as price is respecting this area, then we want to look for opportunities to buy. So then let's draw this from here all the way to here. This would be my zone right here. So in other words, from 130.64 all the way to 130.82 is the zone that we're looking for the buyers to eventually come in at, even though it may, well, let me drag this down a little bit lower, maybe right around here. Let's do 130.58, where we see, this candle right around here, this section right around here. So, right around here, this zone right here is where the buyers could come in. And what we want to do is look for an opportunity to buy on what? Bullish confirmation, right? We don't want to just buy at the level. That's where a lot of people make the mistake. They wait for price to come to a support area or resistance area if you're selling. But in this case, price corrected to an area of support. And then, we, like some traders, immediately jump in. We don't want to do that. We want to look for bullish confirmation. So what we typically do is drop down to a trigger time frame. For those who's been with us for a while, what trigger time frame do you think we'll drop down to? We go over these concepts over and over, but remember, repetition is the best teacher. Okay, so then Jamal said 30. Jesse said 15. Stuart said 15. And yes, the both of you are correct. We're going to go down to the 15-minute. It's the 15-minute chart that we'll jump down to. Remember, on 4-hour corrections, we'll typically go down to the 30-minute or 1 hour. But on the 1 hour corrections, we typically go down to the 15-minute or the 10-minute, and in some cases the 5-minute. It all depends on the nature of that pullback. But let's drop down to the 15-minute. Let's see what's going on. So this is the 15-minute. We can see that momentum has definitely increased to the downside after prices was consolidating right here. So then let me ask you guys this question. For those who's been with us for a while, you can answer, and even if you haven't been with us for a while, you can still answer this question if you know it. But do we see a 3-wave pullback? In other words, do we see something like this? Boom, 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 boom. For this time frame, I mean, for this particular pair on this 15-minute time frame, do we see a 3-leg pullback? A leg A, a leg B, and a leg C. Okay, so Robert said no, Stuart said no, Joe said no, and yep, all of you are correct. We do not see it quite yet. We see price consolidate, but we have one leg right here. We have leg A, and typically we want to see a leg B, and then another leg C, maybe deeper into the zone before we look to buy. And we'll trade that to the upside. So then that's something that we typically want to see. Yeah, I was going to say, yeah, Melvin, you may want to, even describe like, why is it that we're not considering this first attempt to form a leg as, a leg of its own? Like some people would say, then, well, isn't this the first leg? Wouldn't this be leg A, leg B, and leg C right here? So then I think, of course, like we want to make sure that there's a significant test of the true correction zone. But like in this case, like since it's retesting the highs up here, like we know it's going to be just one single, leg A from the top to the bottom. Yeah, or to that retest high. So, in this case, for me, I took it right here. As far as I started the leg A right here. So this is leg A, leg B, and the leg C would be an expansion here. But I know some people started at the other high right here, but that's only if it makes an equal high. In this case, for the retest it didn't. So price, and we'll cover more examples of a 3-leg pullback later. I don't want to get into the complexities of it right now because this is one of the hardest parts. Like this whole notion of three-wave pullback is based on Elliott wave theory. So then even with that theory, there's levels of ambiguity with it. Like, you know, over time, as you look at these charts, you'll get a feel for what's going on. But, you know, sometimes you can be right with your analysis, you know, and sometimes you can be wrong with your analysis. So, you know, we'll see. But what we're going to do is wait. We're going to wait for that third, well, for one, the B leg to form and the C leg to form. So in other words, we're waiting for leg B and then leg C. And then after that, we'll look to buy and we'll trade that to the upside. And we may not get that. What we may see price violate this structure level right here, break below it. And if that is the case, if price does break below this structure area, let me just put a red line right here at the midpoint of this congestion, right around here. Let me make this red, and well, it doesn't really matter. We can have it dashed. But if price breaks and closes below this red line on the 1 hour chart, if we see a break below, then we definitely want to abandon our idea, our buy idea. We'll look to abandon it, and we'll move on to our next opportunity. But let me place an alert right here. So let me say crossing down once per bar close. So if we get a break and close below this particular line, then you definitely want to look for or abandon or abort the idea. So break and close below, abort by idea, which means we're going to leave it alone. So yeah, if we get a break and close below this line right here, then we'll abort it. We won't look for any buys. But as long as price is within this zone or area, we could look for a potential buy setup to form. So that's what we'll look for in this particular pair, and we'll see what happens. Also, I want to do one more thing too, because we can see structurally or technically as well that we can draw this ascending trend line support as well, right around here, and price may want to hit this support right here. So then that's something that we could look at as confluence. Price may want to do something like this, come up and then make another leg down, hit this support area, then pop up. That's something that could potentially happen as well. So then we'll just keep that on the radar. But yeah, that's pretty much it. I don't have any more things to say in regards to US dollar, Japanese yen. But are there any questions on your end? Like, do you have any questions about this particular buy setup or buy opportunity? Let me actually place this right here. We got a buy, and I'm just gonna say up here. Yeah, we might as well do this right here as well, because if you want to, it may be wise to take partial profit too. So if you want to, you can take partial profit. You could take TP1 somewhere around here. Let me change that, and TP TP2 could be a little bit higher, maybe around 130, 150, or a little bit below that. But yeah, that could be our TP2 somewhere up here.
And and also you can just look left to see what would be a good area that you could take profit, because typically you can look at structure and tell where there's resistance and where you would like to take profit ahead of. But let me ask you guys this question: why is it wise to sometimes have a TP1 or a target one? Like, why is it sometimes wise to actually set an alert or an order here to I don't know, scale out of your position? And of course you can write it in the chat, or you can turn on your mic briefly if you want to answer it. But I just want to know if you guys are familiar with why.
Yep. Yeah, Ryan. Yeah, he said because price could turn on you, and yes, exactly. we could see price reverse. Remember, the reason why it reversed up here was because there were sellers here positioned in this area to push price lower, and there could still be sellers at this swing high
to
that want,
defend that
yeah,
level.
to defend this level. So then, when price reaches that level, it's wise just to maybe have a TP1, maybe take partial profit. But if you don't take partial profit, at least move your stop to break even. Do one or the other. But if you do take partial profit, then you don't have to move your stop to break even. You can just keep it there, and then it should be still be a risk-free trade, because the profit that you would capture will pretty much offset whatever you will lose if price does hit your stop. Retrace and hit your stop. So then you'll be pretty much good. After price hits the TP1, you don't have to really worry about the trade.
Yeah. Yeah, exactly. Because, I mean, we know that there's no guarantee. Like when trading, like you're trading random price outcomes. Like we don't know. Like all we know is that based on history, when price came up to this level around 131.28, they found offers in this area. There was offers or sellers to sort of defend this area. And that's the reason why it's considered, a zone of resistance. So then we don't know. There's no guarantee. Like we don't know for sure if price is going to plow higher or crush through these levels, flush through these levels, and extend its move to the upside. I mean, of course, we look at fundamental analysis. There's reasons to believe that we're going to see price continue to the upside, and we'll talk about that when we get to the fundamental analysis part and the intermarket analysis part. But of course, technically speaking, we don't know still. Like we don't know. So then it's just safe and a good practice to take some off scale out of the position if you can, or either move your stop to break even when it gets to this level, and get some profit. Just take some off the table. Just reward yourself for the trade, and then hold it open until it hits the target 2 or the TP2 or whatever you have. But yeah, there's different things you can do.
Yeah. Yeah. So yeah, there's a number of things you can do. I know, man, like there's some things I want to talk about in regards to this, things that can help, but I know for the sake of time, we can probably move forward. But let me just do this right quick, because I think we do have our Dixie up here. But something that you can also look at in order to help you get an idea of what's taking place is the Dixie. And the way the Dixie is looking right now, the US dollar currency index is looking quite bearish right now. So then this could be a reversal taking place. So yeah, it could very well be a reversal taking place right now. So then Jamal may have been correct with his initial assessment of this possibly being a potential sell opportunity eventually. Of course, not now. We still don't know yet. But eventually this thing could really show and prove a potential reversal or sell, bearish sell opportunity. But, we'll see. Only time will tell. As of now, you have in this case right here, you have price creating this structure area, and right now it came back to it, same area. So then, as you guys know, that creates a sort of famous setup, classical chart pattern that we typically see whenever we expect price to push to the upside. But yeah, um, this is what we're seeing right now. So yeah, I know Adam said inverted head and shoulders continuation. Exactly. So then that could happen as well. So we're just gonna really sit on our hands for now and wait for more clarity before we decide to get involved on this US dollar Japanese yen, because we don't know if the US dollar weakness could be coming in right now. We've been seeing this rally in US dollar for a while, and it's due for a correction. It's due for a nice dip. So this is where we be extra cautious. But for the most part, we're going to keep our eye on this. So all right, let me move back to the single screen. All right. So if we don't have any questions, I guess we can move on to another setup. And I might as well go here because like I know I sent an image to the group with pound Aussie. I'm looking for a pound Aussie buy. And it didn't. Well, let me just go there right quick. All right. Okay. And as you guys can see, It didn't go to the area that we wanted it to go to, but when it pushed higher up here, we can see that it came to another area, um, which is an important key area right around here, where we also have our $1.75 institutional level. But for the most part, like we could have entered right here. I entered a buy right around here, but this is right around close to 3 in the morning when I entered this buy. So and then as soon as I entered it, it really started moving strongly to the upside. So then I couldn't tell you even if I could. So of course, this was a setup that I did enter, and it actually did hit the target this morning. But this was a buy opportunity that had a lot of momentum behind it. And what we see right now is this consolidation and this continued break to the upside. And with the way this push to the upside has been, we should still look for an opportunity to buy a dip in price. So then right now, what I'm going to do is remove this right here. And we're going to look for another opportunity to buy this on a pullback or dip in price. So for starters, we have to look at where will we look for opportunities to buy. Well, look left, as they say, structure leaves clues. So then right maybe around here is an area where we can look. If we look historically, we can see that in this area we've seen this area get respected multiple times. Right here at support, of course, right around here, resistance, resistance right here, resistance right here. So then this area could be, respected again as support. Remember, we should always look for price to tell us what, we could look to happen next or soon. So in this case, what we're going to do is draw out this particular zone. Let me do it I'm going to do it from right here, around 75.90, all the way up to around 75.13, you could say, right here. So this is what I'm looking for. I'm looking for price to retrace down into the zone and then pop. Now, of course, I didn't go through directional confluence on this one because it's pretty obvious. On this one, we have multiple time frames supporting movement to the upside. The 1 hour, the 4 hour, even the daily right now is confirming some bias to the upside. But what I want to share with you right now is what typically happens when price is moving harmonically. So then in this case, we had this last correction where price came up here and came all the way down to here. And sometimes what we see happen in the past may happen in the near future. So what I want to do is drag this right around here to this high right here, and voila, we can see that in the same area, the same zone is where price could potentially pull back to. This is what we call a measured pullback. So for those who may not know, this is what we call a measured pullback. And there's a possibility for us to see a nice thrust or push to the upside. But what I'm going to do is, before I do anything and talk about that move, I'm going to jump up to the 4 hour, and I'm going to try to look to see where our next critical area of structure support is on the 4 hour. And it is right here where this institutional level is, right around here. And let me change the color right around there. So then this area could actually be our target if we do look for a buy on pound Aussie. We can target $1.77. Maybe a little bit below that, since this is an institutional area. So right around there. So again, what we're going to do is look for price to correct down into this zone, and then we're going to look for a buy on bullish confirmation, and I'm just going to trade this move to the upside and target this area right here. We're not going to really shoot for extended targets, but somewhere around here is where we can look for our potential new buy opportunity on this pair. So we have to wait for price to come to us. We're not going to chase a trade. We're going to wait for the trade to come to us. But yeah, that's what we're looking for right now. On pound Aussie GBP AUD, we're looking for a pullback, this correction, and an impulse to the upside up into this zone right here, which is around $1.77. So I guess are there any questions about the pound Aussie before we move on? Going once, going twice. All right. So we talked about the pound Aussie. Let's do euro yen. Euro yen is one that we was looking at as well. The euro yen. All right. So then right now we're looking at the euro yen, and we're currently looking at the 1 hour chart. And for this one, looks like price may want to well, we don't know yet. Let me just say that we don't know yet what price wants to do, but as of now we have a bullish bias for this particular pair. As we know, price has been making higher highs, higher lows, but what we could also do is look at directional confluence. Now let's jump up to the 4 hour. On the 4 hour, we see that we have a bullish environment. Price was consolidating, created this inverted head and shoulders setup on the 4 hour. I don't know if you guys can see it on your end, but we have the left shoulder, head, and right shoulder right around here, and price pushed to the upside. So then, we're expecting a potential move to the upside. So, we do have a bullish environment on the 4 hour, and on the daily, we still have a bullish environment. So then, there's a possibility that price could push all the way up and test this 139 level up here, this institutional level at 139. So then there's that possibility. But what we're going to do is look for an opportunity to buy this dip. Look for an opportunity to buy the pullback. So again, we see that price is in the middle of this correction, lower, and we have to identify structure. And all you have to do is look left. Structure leaves clues. We have structure right around here with this wick candle right here. We have this hesitation candle right around here. So then that alone should tell you, hey, okay, we may encounter some support, right around here in this area. So then what I'm going to do is draw out this zone where we could see some support. Change the color, and we can simply wait for price to come to us. Or what you could do, which we haven't done in the other examples, take your Fib retracement tool, draw Fibonacci retracement from the low to the high, and of course we have our 38.2 right here. If we wanted to, you could place a marker right here if we wanted to. Let me do that blue, and then we have our zone somewhere around here. But as soon as price hits the 38.2, we can be, we can set up an alert to be notified, and then from there we can drop down to our trigger to see if we can get a significant pullback. But for the most part, we're looking for a price to pull back, possibly to this area. That's the hope. The hope is that we get a nice, decent pullback to this area, and then from there we will look to buy on bullish confirmation and trade this higher, based on what we typically look for when it comes to these type of setups. But yeah, of course, that's what we'll be looking for the euro yen, and we'll see what happens. Of course, let me move this over a little bit. But yeah, we'll be looking for that type of opportunity to form. And yeah, I don't know if you guys see it on your end, but we see well, let me just draw it. We see this strong impulse, and then we have this correction down here. It's sort of formed like a bullish flag type setup, and then we have another expansion to the upside. So then right now we're just trading a retest. We're looking for a pullback and then a push higher. So yeah, we'll see what happens. But yeah, that's the euro yen, and Yeah, I think Marvin may want to share something, so I'm going to pass the mic over to Marvin, and he's going to, I guess, share something about what could potentially be happening.
Oh, well, no, I was just going to pretty much say, like, really, to be honest with you, just a safe trade or a safe side of the market you can be on is just to really sell the yen. Because if you really look at most of the yen crosses, like except for maybe the Aussie yen and maybe the Kiwi yen, because they're experiencing some softness due to the slowdown in China, with the lockdowns and demand destruction happening there, that typically, like, the yen like weakens whenever there's rising inflation expectations. So then, we'll talk about that a little bit, but that's the reason why we're seeing the US dollar Japanese yen maintain its rally, even though, like Melvin said, it could be rotating lower. The dollar is very exhausted and overbought.
It's a euro yen.
Yeah, I know, but I'm talking about the US dollar Japanese yen now. Like, even with that, like, we saw it moving to the upside, but it could be exhausted because the dollar is heavily overbought. Now for the euro, it could be slightly different. The euro, for the most part, it's been, kind of weak and weakening, but the yen has been much weaker. So even if the euro is weakening, and the yen is much weakening at a faster pace or a more profound rate, you could say, then we're going to still see that upside lift and underpinning of euro yen. But there's the potential to execute a buy, just like Never said on this, just due to that policy divergence, interest rate differentials. Even though the ECB has talked about possibly scaling back on some of their hawkish rhetoric and just being more concerned about growth than they are with inflation. So then, I just kind of wanted to interject and just say that a lot of the yen crosses are rallying to the upside. So yeah.
Yeah. Yeah, so then we see price break through this 38.2 level. So then if you wanted to, you could drop down to a trigger time frame. In our case, 15-minute would be okay. So then this is the 15-minute chart right here. And let's go down to the 10-minute. That may be a little bit better. Okay, so then this is the 10-minute chart. And you can stay here if you want, or you can go down to the 5-minute. But the 10-minute is pretty fine. But 5 minutes okay as well. But let me ask you guys a question. Based on what we see right now on the 5-minute, do we see a three-wave correction? Yes or no? Okay, Stuart said no. Yep. All right. So does anyone else want to take a stab at it? Robert said no. And Greg said no. And yes, all three of you are correct. And yeah, I know Jesse said he's not sure. Yeah, this is a tip. Okay, so then often when price hits resistance, you'll typically see it consolidate on most occasions. This is what we call a consolidation. Yeah, or distribution right here at the resistance. So, as soon as it breaks to the downside, that's typically leg A. And we saw price break to the downside. Now we're seeing price correct, which is what we're expecting to be leg B. And then we expect to see another leg C down here to test the zone before we see the real move to the upside. So then that is what I'm going to look at. Now, could we be wrong? Yes, there's a possibility we could be wrong, because sometimes price does something like this where it will push all the way up, come all the way up here. And then in that case, we'll just look for the pullback, and then we'll trade this higher from here. Because if price does that, what type of pattern will it be forming? I know we go over this over and over again, but it's very important that you see why, you will look to buy if price doesn't give you the three-way pullback that you're looking at. But, we've gone over this over and over again, but sometimes it's good to know and have this embedded in your brain so that you could, recognize it when it does happen. But yeah, just like, Robert said, inverted head and shoulders continuation. Exactly. We have the left shoulder, head,
And if it pulls back.
And right shoulder. If it pulls back right here, we'll get the right shoulder, and then you can look for an opportunity to buy on bullish confirmation. So, you know, on the trigger time frames, you can do that. Like, you can still get involved in a trade, even though it doesn't give you the 3-wave pullback. If it shows something like this, an inverted head and shoulders type setup, then just get in. Or if it shows like another type of reverse, like a double bottom or something, then you can just get in. So, but yeah.
Yeah, I was gonna say, you know, I guess we can talk about how even reversal patterns can be continuation patterns. Like,
Yeah, like in this case, right here, if you was to see something like this is what we call an inverted head and shoulders continuation pattern. And let me ask you guys this question: why do you think we call it that? An inverted head and shoulders continuation pattern. Let me give you a tip. Okay, this one right here on a 5-minute, this one right here is an inverted head and shoulders right here, but this is an inverted head and shoulders reversal pattern. But if we were to get this move right here where price comes all the way up, then comes back, this is called inverted head and shoulders continuation. Why is that, do you think? You know, it's a lot more simpler than you think, but there's a reason why that is the case. I know it said the breakout is in the direction of the main trend. Yep, exactly. So then when we see price push and expand and accelerate to the upside, and it forms this right shoulder, you know, this move, this break, this push in this direction is in the direction of the overall trend, which is to the upside. You know, trend has been, price has been moving up, forming higher highs, higher lows. Price has been moving up. So then if you have an inverted head and shoulders that's in the direction of the trend, like,
that's a continuation.
Yeah, that's a continuation. So then we call that inverted head and shoulders continuation pattern. In other examples, price, it would happen at a reverse, at a support or resistance in this case, and we call this up here a head and shoulders reversal pattern. But right here, it's an inverted head and shoulders continuation pattern.
But it's not yet.
Yeah, well, yeah, it's not yet. But what if this does form? It would be an inverted head and shoulders continuation pattern. But we're not expecting it to form. Really, to be honest with you, we're expecting price to give us another leg to the downside. So then I don't want to confuse you even more. I don't want you guys to think that we're expecting this to happen, because price could actually be forming
double bottom continuation,
that C leg right now to the downside. You know, where we get this correction, and then we have that C leg down here, and then it forms, it may consolidate and break to the upside. So, we'll see what happens. But what we're going to do is be patient, wait for that C leg to form. And if it doesn't form, if it violates structure up here, then we'll look for an opportunity to buy the pullback. So, yeah, this is the euro yen. This is something that we're looking at right now on this particular pair. So are there any questions about this before we move forward? So I know we talked about a few pairs. We talked about the US dollar, Japanese yen. We talked about the pound Aussie. We talked about, I think we did the euro Aussie too, right? I think we did the euro Aussie. And right now we're looking at the euro yen. And man, there's so many opportunities on the radar. It's crazy. I know we can't go through all of them, but I'm going to briefly go through one more just to give you more just to look at. So, we have this set up with the euro yen. We're waiting for it to get to this zone right here before we look to buy. Again, this zone right here is between 137.75, you could say, and 137.91 or 90. So yeah, that's something that you can definitely take a look at. But yeah, so we'll see what happens. But all right, so let's do the pound. As a matter of fact, let me do this first before I decide to do anything. Let me go to the 5-minute, and I'm going to place a marker right here just in case we do get that break right here. If we do see price break and close above this, then we'll want to be notified, and then we'll just simply wait for price to pull back. So let's do crossing up once per bar close. I'm gonna make this real quick. Break and close above bullish reversal. Look to buy on retest or pullback. And we can even look for confirmation too on there as well. But let me say bullish reversal on trigger. All right, but as you guys know, price could be giving us the C leg, and we'll look for a sell somewhere around here. I mean, a buy somewhere around here. All right. So with that said, let's go back up to the 1 hour and let's look at one more setup, which is GBP CHF, the pound Swiss franc. Let's see how that's looking right now. All right. Okay. So yeah, this is the pound Swiss franc. We're looking at the 1 hour. What we can see right here is that price was consolidating for a while, but we recently had a break to the upside. Price is now finding resistance at this known common area of supply or structure resistance. Look left, structure leads clues, but we can expect a dip in price right about now, and that's what we want to look for. But before we do that, we want to see if there is some directional confluence. And in this particular case, well, let's see if there is. So then we know the 1 hour, we have a bullish environment, right? On the 1 hour, there's a bullish environment. I don't even know why this is on, why this is up. But yeah, on the 1 hour, we have a bullish environment. Let me guys know if you guys see what I'm doing right now, because for some reason it seems like the screen is stuck a little bit. But all right, so then right here on the 4 hour, we see this nice strong impulse to the upside. It looks like price is definitely reversing. I consider this a bullish signal. So I'm going to say that we're in a bullish environment right now, even based on what we see on the 4 hour and on the daily. We're in this consolidation phase, so we're sort of neutral, but the 20 SMA is sloping upwards, so it's still a slight bullish sentiment or bias. But what I'm going to do is look for a buy opportunity on a dip in price. So again, what we want to do is look to see where we could look for potential buys at. And what you could do is look left, structure leads clues. So then right around here, let me just drop the air line right around. Let me drop it down a little bit lower. Right around here is where I would like to see price go before I do anything. Because if you look left, we can see that we have, this area acted as resistance right here, support right here, resistance right here in this area, and support right around here. So, of course, this level may act as support again. But what we're going to do is identify a zone. So let me do that right now. Let me draw this rectangle, this zone, and I'm going to take it from right here, 1.2228, you could say, all the way up to this line right here. But let me do it to this wick right here, to the left. So then right here where this wick is, right here in this area, this is where I think price could go. So that's between 1.2223 and 1.2240, you could say. We might as well do 20. And let me just do 20, because that 20 is a strong number level. And also we have our simple moving average here too, our 1 hour 100 simple moving average right around there as well. So anywhere within this zone is where price can go. So let me drag this here, and what I'll do is say, hey, if we get a pullback into this zone to retest this area as support, then we could look for an opportunity to buy. But we want to look for that opportunity to buy on bullish confirmation. And in this case right here, we definitely want to look to take partial profit, because this is a known level of supply and resistance. So we want to take partial profit once it reaches the highs up here, and then we want to shoot for extended targets, maybe somewhere, right around here or up here. Where this institutional level is, it's, at 2300, right around here. We may want to close out right around there. So, for this one, we can have two targets. Target one could be, somewhere right around here. And target two could be, somewhere right around there, up there. So yeah, this is what we're looking for right now on pound Swiss franc. We want the trade to come to us. So yeah, we'll look to buy on bullish confirmation. All right. So yeah, are there any questions before we move on? Going once, going twice. All right. So I guess what we can do right now is switch. I know Marvin wants to talk about what's been happening fundamentally and do all of the intermarket analysis, all that good stuff. And then from there, we may look at a pair, maybe one pair for the sake of time, or maybe two, via top-down analysis. So with that said, I'm going to pass the mic over to Marvin, and he's going to take over for now, and then we're going to get right back into looking at these charts again. All right, so yeah, I'm going to try to explain what's going on as best as I can. Of course, some of these concepts can be challenging, especially if you're new to, just assessing the markets and understanding, the financial markets and how things are functioning in the economy. But I'm going to do my best to sort of describe what's happening today and what's going to happen throughout, the remainder of this week. But as you guys know, we're in the second week of May. And some of you guys know the old trading adage or the old trading proverb that says selling may go away. And typically, the reason why that's normally, a proverb or an old trading adage that you see a lot of traders live by is because, we're about to approach the summer malaise where, we're going to see volatility subside. We're going to see a lot of our hedge funds and investment bankers go on vacation for the summer. So then we get a drop in that volatility as we also get a drop in liquidity during the summer doldrums when volumes are low. So, of course, we have our adage, selling may go away, but I don't think analysts and traders thought that that adage would mean that, we would see assets across the board sell off the way they've been selling off. Because traditionally and seasonally, we would see, some continued buying in risk assets, continue buying in stocks until like the second week or the third week where we do see that selling may go away. But as you guys know, assets have been deleveraging across the board. If we look at stock markets, let's just go to the S&P 500. Let's just do that real quick. And this has yet to be open, but I'm just going to go to the daily chart. But if we look at these assets, we can see that they've been falling. They've been tumbling to the downside. It's been pretty much risk assets across the board, has been selling off. And I don't think traders and analysts, investors had this type of selling May type of ideal in mind, because typically what they mean by selling May is that when stocks are high, when stocks are rallying to the upside, traders should take profit. They should cover their long positions or sell their long positions. So in the traditional stock markets, we would see, of course, a continuation of higher highs, higher lows. And then before May closes, we want to scale out. We want to sell some of our positions. We want to sell in May, go away, unwind from some of that risk so that we can, kind of, navigate through the summer months. So then a lot of, hedge fund managers and, investment bankers, they sell in May and they go on these long extended vacations. And normally the summer doldrums last until like, the first week of September or like even through August. And typically August is like the worst month because not only you have the US traders that are on vacation, but really in August, that's the European vacation month or the summer month in Europe, where, the European investors and traders go on holiday or go on summer hiatus as well. So then, we typically, so then
like what I'm trying to say is that this May is unique and it's unlike any other selling May go away. This is actually deleveraging of assets across the board. And the only assets that we really see benefiting this month is really the dollar and yield and rate. Let me just go to the Dixie right quick so that you guys can see. But you can see that the dollar has been rallying to the upside. I know this is Melvin's chart, so he has a lot of markups on this chart. But as you can see, the dollar has been on this huge rally to the upside. It's been pretty parabolic, and so has Treasury yields. Let me just go up to the U.S. 10-year Treasury yield so that you can see that, yields have been moving to the upside, and it's actually at 3.137%. So we can see here that the market is pricing in both higher rates and higher yields. The market is sort of like, how can I say it? Like the market is letting economists letting us know that really, yields should be moving upward and the dollar should be strong based on that. Because whenever interest rate expectations rise, that's going to raise the value of the US dollar. You remember the interest rate on the US dollar helps to enhance its purchasing power, helps to increase its value. So then as rates go up, we will see the US dollar go up as well. So, so what we do know is that typically higher yields are inversely, inversely correlated with a few assets. For one, like, we see this US 10-year yield moving to the upside. Um, like we should see gold. Let me just put this right here. Let's see what's happening. And then let's go to gold right here, because typically it doesn't happen all the time, but there's an inverse relationship between gold and yields. But let me just with let me just go to well, I'm trying to figure out, should I go to the daily? Well, let me just go to the daily first right here. But typically, what happens is that, as yields move to the upside, that helps to sort of stabilize gold or pull gold backward. There's typically an inverse relationship between yields or rates and gold. Whenever we see treasury yields move to the upside, normally we'll see downside pressure on XAU USD. And because for one, when yields are moving to the upside, like depending on the reason for it, and that's one thing I wanted to point out, like just because rates are moving to the upside, it could be moving to the upside due to a plethora of different reasons. And this environment that we're in, the reason why rates are moving to the upside is because of inflation. Bonds are selling off primarily due to inflation. They're saying there's no point in holding on to these assets for the long term if we're not going to get any type of return from it, because by the time these bonds mature, inflation is going to eat away at all of our profits. So there's no point in holding on to bonds that's going to dwindle in value. If anything, they're going to lose money holding on to the bonds, and they're going to take a haircut in a sense when these bonds mature. So then that's the reason why we're seeing the deep sell-off in bonds, and we're seeing treasury yields, move to the upside. But because of that, because we're seeing yields move to the upside and that the market is pricing in higher interest rate expectations, we're also seeing stocks or many of our risk-oriented assets pressured to the downside, because that's one thing stock markets do not like. They don't like higher rates, especially more of our growth stocks, our tech-based stocks, or stocks that have a higher beta. They don't like, rising interest rates, environment, or a rising rate cycle. That's something that they just don't like. So then, of course, right now we're sort of dealing with that. We're dealing with the type of environment we're in where assets are going to slide lower. And we're seeing that even with Bitcoin. We're seeing Bitcoin recently, almost like, how can I put it? Let's just go to it right now. ETC USD, and I'm going to go. But even with Bitcoin, we're seeing Bitcoin continue to slide lower because it's trading. It has a high correlation, high positive correlation with stocks. And that's something that was sort of the discussion on last week, that when we saw the move after the FOMC monetary policy statement, where once they released their statement, we saw, of course, we saw a strong bounce in equities, but on the following day, we saw stock markets tank and sell off, and volatility picked to the upside. But what we're noticing with Bitcoin, which is quite new, we're seeing that it's highly correlated to the Nasdaq. It's highly correlated to stocks. It has a high beta, and it's actually very risk sensitive, which means that whenever volatility picks up, we're going to see, the Bitcoin sell off along with pretty much other risk assets like stocks. So then one thing that analysts were saying, they were saying that if we see a sell off in Bitcoin over the weekend, could that sort of be the canary in the coal mine to sort of signal to investors that we're going to see that same type of open in US stock markets? So, and that's kind of what we're seeing right now when we look at future markets. So then let me just, minimize this right quick and then go to FinViz. So we can go to our heat map. So then let's go to our heat map right here on finviz.com. I know. Okay. Yeah. And as you can see, this is our futures heat map. And as you can see, the indices across the board are sliding lower. They're in negative territory. And our VIX is above 30 and at 32. So you remember, whenever the VIX is rising, that means traders are actually buying insurance to sort of hedge themselves from any type of losses incurred from, the sell-off in stocks. This is our volatility indicator, and there's always an inverse relationship between the VIX and stock markets. So then whenever the VIX moves up, we should normally see stocks sell off, especially if it moves up above its average range. So then let me just touch on that right now, because like really what we see happening right now is really reflective of what we see happening in volatility and even in the VIX. So then let me just do this real quick right here. So this is the VIX right here. And as you can see right now for the VIX, like last year, we just go back to last year and let me just squeeze this in. We can see that the VIX, the average level of the VIX was much lower. It was around, like between 17 and 20. It was much lower, which back then in 2021, volatility was stabilizing. We didn't see huge sell-offs in price. But for this year, as we move into 2022, we're seeing VIX levels move higher to the upside. And they're actually, on average between 24, 25, just much higher, 24, 27. But you can see here that there's been a few times that it did breach 30 in that territory where we do see, some risk aversion and heavy selling. So then we can see that the average level of the VIX have moved slightly higher. So then whenever we see VIX moving slightly higher, the average level of it, then we should expect more selling, or we should expect stock markets to be very risk sensitive and sell off, rapidly, and have these huge moments of volatility where, just any headline or any news could send stocks tumbling lower at a profound rate. So then it's approaching these highs up here. Of course, it hasn't reached these highs yet, but it's getting near to these highs again, where we're definitely going to have to be cautious on holding on to any long stock positions. But traders are buying the VIX because they're saying, hey, we need to hedge ourselves, because it seems as if right now interest rates are going to continue to climb higher. We're seeing inflation expectations pick up. So then, of course, that means that the central bank, like the Federal Reserve Bank, is going to be forced to have to hike rates and possibly even readopt their whole ideal of 75 basis points. Because last week, Jerome Powell said they don't have any plans to hike by 75 basis points. But the market didn't like that the day following. And we saw, stock markets tank because inflation continued to pick to the upside. And the market was saying, no, inflation is hot. We need to deal with it as soon as possible. And actually, the Fed is behind the curve and raising rates. So then there's a lot going on. I know for this week of trading, let me just pull up the investing.com and go to the economic docket. Okay, let's just do this investing.com, the calendar, so we can get an idea of what's coming out. I know this week, for this week, markets will be focused on inflation data. We don't have any central bank monetary policy meetings this week. But what we do have for a lot of the Fed presidents, the regional Fed presidents, they're going to start going back on their tours again, speaking at college campuses and at different business conferences. So then we're going to be hearing. I think this week there's 10 Fed regional presidents that will be speaking in different conferences and different events across the world. So then I know traders and analysts are going to be monitoring what comes out of those speeches, just to see, okay, are they changing their stance from the last week's monetary policy statement? How different are like, they're going to be assessing if they're saying anything different than what was communicated on last Wednesday, when the Fed released their monetary policy statement. So then, some traders going to be paying attention to that. Of course, you guys don't have to. Just if you want, you can just follow the technicals. But yeah, for this week, it's going to be all about inflation data. We have the US CPI data coming out, US PPI data coming out. And we're definitely going to talk about that a little bit more on Wednesday, because a lot of the action is really going to start during the latter half of the week. This first half of the week is going to be pretty calm, unless there's certain headlines or black swans that cause some type of reaction in the market. But yeah, we don't have really much on the economic docket for today. We just they're not really high tier, high priority data. They're first tier data. Is not really important. But yeah, so then we don't really have much on this Monday. But as we approach Wednesday, that's when things are going to start heating up, and we're going to get that inflation data coming in. But but yeah, so that's with the economic calendar. But we see that the future markets are selling off. Crude oil is selling off, along with gold, silver, precious metals. Our base metals are selling off. And that's primarily due to rising interest rate expectations. Rising inflation is causing markets, the implied yields, to move higher, and that's going to weigh on all types of assets. So we see the leveraging across the board, and it seems like there's no other alternative to invest in but the US dollar and sell US bonds. Like, it seems like right now that's the only other alternative. It's like a TINA environment. We talked about TINA on, I think it was either last week or the week before, where TINA is an acronym for there is no alternative. So then right now people are piling into whatever they can, whatever asset they can, because there's no other alternative. Now, we talked about the dollar pulling back. And right now, the dollar is not the strongest currency for today. Actually, the pound is. The pound is followed by the euro and then the US dollar, which is pretty interesting, because both of these two currencies are in, Europe. They're in that European region, and both of their central banks have come out saying that they're concerned about the blowback. They're concerned about what's happening in China with the slowdown. They're concerned about what's happening with Ukraine and Russia. And because of their proximity to that part of the world, they know that there's reasons to be concerned about recession, them moving into recession due to the slowdown in that part of the world. So then, for a while, we began to see the pound and the euro sell off. But right now, for today, we're seeing the pound and the euro correct and move higher. It's gaining some strength for today. Now, this could just be simply a Monday retracement, Tuesday turnaround, where we see the pound and euro just strengthening for now. And then on Tuesday, we're going to see a turnaround Tuesday where we see it slide lower. But I thought this was interesting to see the pound and the euro stronger for this session. But if we look to the other end of the spectrum, we can see that our two weakest currencies are the Aussie, the Kiwi or the New Zealand dollar, and the Swiss franc. These three currencies are selling off. And the reason why the Aussie and Kiwi is weak is due to just slowing growth in China. I know they had some trade balance data come out on yesterday, and then I think they're going to have some inflation data coming out either tonight or tomorrow, but there's signs of their economy becoming sluggish. I know on last week we had the Chinese Caixin PMI numbers, which came out deeply in contraction territory, which means their economy is contracting and there's demand destruction there. There's a slowdown in growth simply because, everyone's on lockdown. And this is going on, like, I can't remember like how long, but it's been a long time that they pretty much put a halt on their economy. So then that's creating some demand destruction there, and that means that right now there's not going to be a huge need for certain commodities that they import from Australia and New Zealand. Since most of Australia's economy is really tied to their exports to China, if there's a slowdown in China, then China is not going to import as many commodities, hard commodities and metals from Australia. So then, of course, this is weighing on the Australian dollar. The Australian dollar and the Kiwi, the New Zealand dollar, are selling off as a result of that. And you can trade the Aussie actually as a proxy for the Chinese yuan or the Chinese renminbi. So that's one thing to keep in mind. If you don't want to trade the Chinese yuan because you hate the spreads or sometimes the volatility there, you can actually trade the Australian dollar as a proxy for the Chinese yuan. So, that's just something to keep in mind, since they're a strong trading partner with China, and a lot of their economy, most of their economy, their growth, their GDP is based on their business with China. So then, but we see that selling off on this Monday. And we just talked about cryptos really specifically Bitcoin. We talked about that selling off as well. We know that the dollar, is strong in this case, but we know that Bitcoin right now is being strongly tied to a lot of our traditional risk assets. And as we see the VIX move to the upside, we're seeing Bitcoin and other cryptocurrencies and altcoins sell off as it's, selling off due to it being a high beta asset. It's very volatile, Bitcoin. For those of you guys that have been trading for years, there's wild swings. It's very volatile. So it has a higher beta than even the traditional, stock market. It sort of outpaces and moves when it comes to volatility, even our stock indices. So then in this case, since yields are moving to the upside, since the VIX is moving upward, we're going to see that sell off in Bitcoin as well. But the move for today is to be risk averse, to look for safety. I'm trying to figure out what safe place can you pile into, and it's really hard to find. There's hardly any safe place to go right now other than stay in cash. That's the only other option or trade that I can recommend. But if you're trading Forex, you can definitely look for safety in the pound, in the euro for today. So but that's pretty much it. I think I'm just gonna, in the fundamental analysis part, because I know Melvin has some more trade setups to cover for now. So then I'm just going to go ahead and pass the mic back over to Melvin, and he's going to continue with the top-down analysis portion of today's webinar. All right. So, we can move forward and start looking at these charts again. And but before we do that, let's review some of those other pairs to see what's been happening, what's been taking place on some of those setups. So the first one we looked at was the US dollar, Japanese yen. Let's just take a look at that to see if things changed. And as you can see, this area is still holding. You can see here that it went and tested this red line, but it did not break and close below it, which means that we can still see this price push to the upside. Also, it tested perfectly this ascending trend line support. You see that? Let me remove this right here so you can see it. You see that? It tested it, and then now is bouncing to the upside, but we still got to wait for bullish confirmation. We're not quite there yet. So, we'll just sit on our hands and wait for this one. But this is the US dollar, Japanese yen. This buy opportunity is still in play, but we never know. Price could still push to the downside. But all right, so then we looked at that. What else did we look at? I think we did, of course, pound Aussie and euro Aussie.
Aussie, yeah, that's still correcting to the downside, and it looks like it's headed in this particular area right here. But what I'm going to do, I'm going to put this right here. Okay, and we have our 38.2 right here, but let me place a price alert right around here and just say, because it seems like it's really correcting now at 9, which is the date. They say price is testing or near 382 and structure support zone. Drop down to trigger. All right. So yeah, we'll look for a potential opportunity to buy once the price gets into this particular zone. But yeah, this is the pound Aussie is going as planned. What else do we focus on? I think we did euro yen. I think that was one pair we did, euro yen, and as you can see, price is already in that zone already. So it seems like things may be shifting and reversing, but we don't know. Price could still, this area could still hold, and we can still see price push to the downside. But let's go back down to the 5-minute. So right here on the 5-minute, we do see a three-way pullback, right? We see leg A, leg B, and leg C, right? We see that three-way pullback. Therefore, what we could do, we could look for an opportunity to buy this on a bullish break to the upside. So then what I want to do in this example, I'm going to move this higher and move it right to the midpoint of this congestion area right here. If we see price break and close above this level right here, then we can look to buy on a retest. In other words, the price breaks and closes above this area, look for price to retest this area as support, and then we'll look to buy and trade this higher. But yeah, that's the euro yen. Yeah, we just have to wait and see what happens with that. So that's going as planned for now. But let's look at, I think we did euro Aussie. Let's see how that's looking. So yeah, euro Aussie. Or did we do euro Aussie? I don't think we did euro Aussie. I don't think we did euro Aussie. What else? What was it that we did? Let me see. But I know we did, we just talked about pound Aussie, pound Swiss franc. I know we did pound Swiss franc. So, yep. And that one is still heading in our direction. So, yeah, we'll be notified of that one shortly as well. But let me do this right quick. See, 38.2 is right here. And we could just place an alert whenever we're notified of it crossing the 38.2, then that's when we could pay attention to this particular setup. Price testing 382 to trigger improvement. Look to buy, and then you have 2 targets. This one. Make sure we remember that. But all right. Okay, so with that said, I guess what we can do right now is move forward, and we're going to talk about some, top-down analysis. And yeah, the first one I want to cover is really a review or update of what we mentioned, I believe, on Friday. I think we talked about this on Friday, but let me go to for one, I'll just start at the daily chart just to keep it quick and brief. Go to the daily, and we're going to go to CAD Swiss franc. Swiss franc here. So right here, we can see that price, kept making higher highs, higher lows, higher highs, higher lows, higher highs. And we saw this measured move expansion right here, from here all the way up to, you know, right around here, you know, is a measured move expansion, you could say, right into the 0.77 cent psychological area of resistance, just like what we mentioned before. And on Friday, we talked about how price was in consolidation because of this sideways price action. If you look at these daily candles for the past few days, we've been seeing it pretty much maintain this range between this low right here and, you know, the high up here. So, you know, it's been in a phase of distribution or topping or consolidation. And what we need to see is a violation of this low, pull back, and then get involved. So then that's what we typically want to see. But whenever you see sideways candles on the daily, then what you can assume, okay, all right, yeah, hit that 382. This is the alert we just set up on that on pound Aussie. We'll go to that later. But well, yeah, let me just talk about this first and then we'll go back there. So then, you know, what we can assume here is that there's likely topping on the 4-hour, and that's what we talked about on Friday, I believe. So we zoom out, go to the 4-hour, and what we can see is this type of price action right now. And what we need to see is a violation of this structure level to the downside. If we can get a nice clean, let me use this one, a nice clean break to the downside of this zone, we'll just simply look for the retest and then look to sell on bearish confirmation. So then we're still looking for this sell opportunity. Nothing's changed. But remember, on 4-hour topping setups, it could take anywhere between 48 and 72 hours, you know, for that particular topping pattern to complete. So, you know, we still have time. You know, anything can happen. But yeah, this is just a review, just in case you forgot. We're looking for a potential topping setup, 4-hour reversal setup on CAD Swiss franc. All right. So yeah, are there any questions with this pair before we move forward? Okay, so that's CAD Swiss franc. All right. So yeah, the next pair I want to talk about is it's a good pair. It's definitely something that you can really share as far as how you should properly trade. But before we go there, let's go to the pound Aussie. Let's see what's happening with that. Like, I know we were on the 1-hour on that one, and go to the pound Aussie. All right. So yeah, looks like price is testing that zone right now. It hit the 38.2 and is testing this zone or this area of support, you could say. So what we can do right now, we can just drop down to our trigger time frame. Let's see how price is moving. Let's go to the 15-minute chart. Is this a good chart to use for our trigger? Yes or no? Let me ask you guys, is this a good time frame to use for our trigger? Yes or no? Or should we drop down? Okay, Stuart said no. All right. And yeah, it's not a good time. So let's go to the 10-minute. 10-minute is okay. Okay, now pound Swiss franc is also hitting support as well. So pound Aussie hit the alert, pound Swiss franc hit the alert. So both of these are correcting lower now. But here we are on the 10-minute chart. Is this a good time frame to use? I don't know. Let me go down to the 5-minute. That may be better. So yep, the 5-minute to me looks a bit better. So what we're going to do, we're going to look for an opportunity to buy on bullish confirmation. And what we see right here, we see that price gave us leg A. And I'm sort of iffy on this. I don't know if this is a leg B right here. Like, I'm not too confident in this being a leg B, but I'm going to draw it anyways. And this is a leg C down here. So then, you know, soon we should see the bullish confirmation and price expand to the upside. So then that's what we'll be looking for on pound Aussie. I'll keep you posted on that. But what we can also do is go to pound Swiss franc. And let me see how that is. We can stay on the 5-minute chart. Okay.
So yeah, on a 5-minute chart, it looks like we just have one leg to me. So then that helps me with the pound Aussie, because if this only has one leg to the downside as far as on the trigger time frame, then we can assume that even on the pound Aussie, we just have that A leg. So yeah, we'll see what happens. Remember, we want to see something like this: leg A, leg B, and leg C, and then we can trade this to the upside. So that's something that we definitely want to see on pound Swiss franc as well. All right. So yeah, pound Aussie, pound Swiss franc, we're still looking for those. All right. With that said, let's move on and let's talk about this last pair, doing top-down analysis. And this is a pretty good one. Let me go to the weekly first. And let me go to pound CAD. All right, pound CAD. So this is a good one to actually use because there's some lessons that we can glean from this. But as you guys can see, let me delete this because I don't want to confuse you guys. But as you guys know, price has been expanding to the downside after it was consolidating for a while. We can see up here on the weekly, we was in this consolidation phase for a long time, and then price all of a sudden broke and expanded strongly to the downside with a nice strong impulse on the weekly down into an area of weekly structure support. Look left, structure leaves clues. So then what we see right here is price testing this area of weekly support, and at the same time testing this area as well. Let me drop the line right. And yeah, I know some of you guys already know what this level is, but the $1.58 level, this is what we call an institutional psychological level. So then right around this zone is where price is finding some support. So then we know that this is a key area that we have to definitely identify. We cannot ignore this particular zone because it's important. So let me do that real quick. And all right, so it's hitting this support. We could see price bounce to the upside. Let's drop down to the daily. Well, yeah, before we do that, for one, look at the stochastics. Stochastics is what? Is it overbought or oversold? Let me ask you guys that question. Is it overbought, oversold? Because that can help you to determine what may be potentially taking place soon. So now I know Robert said oversold. Yep, and he's correct. Joe said oversold as well. Yep, everyone's correct. Jesse said oversold. So then remember this, and I know we say this often, but this is very important for you to know because this can help you become more consistent with your trading. Whenever price hits a weekly area of support or resistance, let me just use support in this case. We should a weekly area of support or even a daily area of support. If you see your stochastics or your RSI oversold, at the same time it's testing that strong higher time frame support level, then bear in mind you should see price create a reversal pattern, maybe like a double bottom or something on a smaller time frame, and you could look for a possibility for price to push higher. So this is something that you will see often. But the very fact that we see that price is hitting weekly support right now and our weekly stochastic is oversold tells us that something is shifting and something is changing. So then what we're going to do is drop down to the daily chart and see if we see the same thing. Because typically if you see it happen on the weekly, if price hits weekly support and it's oversold on the weekly, then what you will eventually see is bottoming on the daily. But we may not have that yet. But let's go to the daily chart. Okay, so right here, we're looking at the daily, and we can see right here that, price hit this area right here. It created a nice impulse leg lower.
into this zone. And, as we know, stochastic is, still oversold to some degree. It looks like there could be some possible divergence happening, or convergence, whatever you want to call it. But we could see a potential momentum change right now on this particular pair, because we see that it's oversold, and it looks like some, let me just, look like it could be some bullish divergence, or what some may call convergence happening. So there's a possibility for us to get in on this move to the upside. But there's a few things we have to pay attention to first. But we do see price hitting support and stochastics being oversold. So let's drop down to the 4-hour and let's see if that is the case. So right here on the 4-hour, it's pretty interesting, because we do see price consolidate and bottom, and there's a possibility we could see something like this where price tests this area of support and go up. However, we do have this descending trend line resistance as well, and we have to pay attention to that because it's there for a reason. So really, with this setup, to be honest with you, two things can happen. There's a plan A and a plan B. Plan B for me is to, of course, well, plan A is this. We could, let me just draw it in first. We could wait for price to break this trend line to the upside. By that time, we should see a 4-hour reversal pattern in bullish environment. Then we could wait for the pullback, maybe to retest this trend line as support, and then trade this higher. That's plan A. But plan B could be a sell, because what we see right here, we do see a 3-way pullback. You see a leg A, leg B, leg C right there. So there's a possibility that we could see a reversal in price. So if price breaks and closes below this structure area, let me actually change the color. But if we get price to break and close below this level or this area right here, then we could see a potential sell opportunity form. In other words, we could see something like this. This is plan B. If price breaks and closes below, wait for price to pull back, retest this area as resistance. What was once support becomes resistance, and then you can enter a sell and trade this down to the lows right here, because this is a key area of structure support, and we don't want to overdo it. So in other words, there's two opportunities. There's a buy right here. There's a buy, and we also have a sell, potential sell right here on this particular pair. So, right now, you just got to wait to see what happens. But price could very well break to the downside, pull back, give us a sell, or it could very well respect this zone, push, break to the upside, give us another retest, and then we'll look for a buy. So in either case, we'll be fine. And this is how you need to trade. You need to always have a plan A and a plan B. You need to always be fluid with your trades. Don't assume that your bias is correct, because the market can do whatever it wants to do. Your job is to read what price action is telling you and then make a decision from there. Plan accordingly. Even if you have to abort a trade idea, you'll do that just for the sake of you trading what the market gives you. You can only do what the market gives you. You can only trade if the market is giving you a good setup based on your particular trading style or trading plan. And in this case, if we don't see price respect this zone right here and push higher or respect it, we're not going to look for a buy. And if we don't see price break, and if you see price break through the zone, then we'll look for a sell. So yeah, that's pretty much it. I hope that makes sense. Let me know if it doesn't. All right. So yeah, before we close out, I want to ask any questions. If you guys have any questions in regards to trading or even stocks in particular. Like I know a few of you guys like to trade stocks. You like to trade options. So Yeah, and even cryptocurrency. So then right now, we definitely want to give you an opportunity to ask any question you want, even if you need us to take a look at a particular asset. It could be in cryptos, it could be in stocks, whatever you want us to take a look at. We can look at it and we can tell you what we think may happen based on how price action is moving. But if not, if there aren't any questions, then we can definitely close out for today or for this morning. But yeah, we're here for you guys. Make sure that for those who let me see, I think someone. Okay, can we take a look at XRP, please? Which is, yeah, Ripple. So let's do that right now. Let's go to Ripple. Let me go to the daily chart first. And let's go to XRP. And I usually like to do Kraken, but I may not, because sometimes Kraken could sometimes have a different name to it. But I guess for now, what we could just use is just keep it simple, USD. Oh, right here. Here it is, right here. All right. So right now we're looking at the daily chart of Ripple, and this is pretty interesting. For a while, really for a number of weeks, we've been seeing this pair slide lower. After consolidating for a period, but now it's breaking to the downside, and it broke through a key area. I want to identify this area really right around here. It broke below this key area and it hasn't recovered since. We saw price, break and expand to the downside, come back, retest this area, and now we see another impulse leg. So, it's looking kind of interesting. Right now, we see price make this new impulse lower, and we can look to see if this is a harmonic move or not. But we do have structure right here, and we can see that price pierced below it, but it hasn't broken below it yet. The day hasn't finished yet, so anything can happen. But if price does break below this level, that could mean that we could see more downside. So then that's something that you have to bear in mind. But let me go to the weekly just to see what's the weekly showing us. Okay, because the weekly has a longer area of demand right here. So let me actually draw that in as well. And so from here all the way to here is the area of demand that we need to pay attention to. So, right here, we can see that on multiple occasions, price came to this zone, this area, and we saw a nice bounce to the upside. Came to the zone area, we saw a nice bounce to the upside. We may see the same thing really, really soon, because of a repeatable footprint that we see on Ripple. So what we don't want to do is assume that price is going to go up. Now, if you are an investor, and you're just investing in this cryptocurrency, then if you want to, you could go in, right about now, if you want to. However, it's still risky. Like what I typically like to do is see bullish confirmation. So then, just like in this last example right here, like if you look at this on the daily, and even if you drill down even to the 4-hour or whatever, but right here, we see that price pushed up and corrected. You can see in this last example,
When it tested this area.
when it tested the same area, it consolidated for a period, which is a sign. You could actually go down to the 4-hour actually. But if you just wait some time, you'll get a breakout and then a retest. And then you can look to get in that way, if you want to. But of course, it's always good to look for bullish confirmation before you decide to do anything. Let's see how this looks on a 4-hour chart. The same area, right around here. Let me highlight it. And let's go to the 4-hour chart to see how this looks. So that's right here. So right here, we can see that price gave us this nice double bottom. And then it broke to the upside. We had a break to the
And
upside,
close.
and close, above it right here. We see this break and close above this double bottom. And then we see price correct. And then right around here on this correction is where you could have entered your buy and trade that to the upside. But we can see a similar thing now. Like if you go to the 4-hour chart, remember price likes to use these repeatable footprints and patterns. What was done before may be done again. So then what we could expect even on this one is another 4-hour bottoming pattern, either a double bottom or an inverted head and shoulders before you commit to buying. So then that's what I would do. So if I was to buy Ripple, I'll wait for confirmation. I'll wait for that bottoming to take place, either a double bottom or W pattern or an inverted head and shoulders pattern before I decide to trade this or look to buy.
Yeah. You want to see some type of accumulation, some type of consolidation at those levels. Because one thing that you need to know is that double bottoms and inverted head and shoulders are zones of accumulation or consolidation. It's just that these consolidation patterns aren't extended for a long period of time. We'll just normally see two retests of a zone and then the breakout. Or in this case, we'll see the left shoulder, the head, and the right shoulder, and then eventually a breakout. But these are really areas of consolidation where the price is moving sideways. They're at a point where they're trying to relax and unwind, and then you see that breakout take place at a certain point. But you want to see some type of accumulation of bids here, some type of consolidation. As it accumulates bids, you will see that breakout, and then you can get in on that confirmation that the market is turning bullish, or Ripple is turning bullish in this case. So then I will wait for that, because right now it's too early to tell how price is going to respond to this level, because it can very well continue to tumble lower. Especially what we talked about with the VIX being at elevated levels. That's going to put pressure on cryptocurrencies across the board.
Yes, that'll be strong.
Since that connection, that correlation has just recently been established. But we don't know. So then you always want to trade after confirmation. You don't want to find yourself catching a falling sword or catching a falling knife and buying at the end of a tumble lower, when really, to be honest with you, picking tops and bottoms aren't the way to do it. Like, you can't just jump in, and just expect, it to go up simply because it's support. Like, we don't know if it's going to honor this support zone. Yes, it's honored it times before. We saw price respond and consolidation, but it can consolidate and still break lower. Like, every consolidation pattern doesn't have to result in a break into the opposite direction or a reversal. It could just simply mean a consolidation and a break lower. So so there's multiple factors that can go into what Ripple would do. I really haven't done much reading on this particular cryptocurrency, but it's tumbling like the rest of them. It's falling like the rest of them. But like, if you want to buy, then just like Melvin said, look for consolidation or some type of bottoming pattern, on in this particular support zone. And then once you get that confirmation of a breaking close above the neckline of that zone, then you can look to buy. But it's kind of hard to say now. It's kind of premature to say what it's going to do. But if you're a long-term investor and you want to go buy, go ahead. If you want to buy and hold cryptos, then you have every right to do it, because it's that support and is at a discount rate. The key to investing, you want to get at a cheap rate, discount rate. So since it's falling, then you can just buy a little bit now. And if it falls some more, buy a little bit later on at a cheaper price. So yeah.
So we'll be looking for that, and hopefully that was helpful. But all right. So with that said, are there any more questions before we close out for today? Remember, this is your time where you guys can get all the help you need. If you're looking at a particular stock, commodity, asset, currency pair, it does not matter. We can analyze it for you and show you what we would do. Because guys, like, we've been doing this for a long time. So when it comes to looking at this as a chart technician and even with our backdrop on fundamentals, we can sort of help you get a better perspective on what to look out for. But yeah, even if you guys don't have any questions now, just contact us. Also, for those who haven't joined the new Discord group yet, please move over. We don't know. We may phase things out weeks, like we don't know. But just start moving over and just give it a try. And if you guys don't like it, I mean, of course, right now we got decent feedback on it, but we may, pivot. But for the most part, things look like it's good, but we need to get more members over there and start really showing some activity, interacting, start, showing that, hey, we're a good community. So then I'm going to be more active. Like, I know I'm not as active as Marvin is. I know Marvin posts a lot of content and articles, but I'm going to be more active in regards to, letting you know what trade ideas I'm looking at. Like, just being more active and asking you guys questions, maybe polling you guys, giving you guys a survey, that type of stuff. But yeah, I know Telegram is more user friendly and is not as buggy as Discord, but Discord just has a lot of features that we like and that we feel is necessary for what we want to do. But all right, that's pretty much it. I guess we can move on from there. Thank you guys so much for coming to today's session. We really do appreciate you guys. And as we said before, remember to always count your blessings, not your pips. And we will definitely see you guys soon. Stay encouraged. Oh yeah, by the way, like, I know some of you guys, you're interested in getting funded, and that's our goal this summer, is to make sure a number of you guys get funded. So then that's what we're going to work on really, really, really soon. We're going to have a special meeting for those who are interested in getting funded, so that we can go over a few things you need to bear in mind before we actually move in that direction and take this test, you could say. But yeah, we'll let you guys know something really, really soon. All right, until we meet again, you guys have a wonderful rest of your day, and we'll definitely talk soon. Stay blessed, stay encouraged, and remember to always count your blessings, not your pips. And we'll see you guys soon. All right, talk to you later. All right, Ken and bye.